This is Jason Rockney, a proud military member of the United States Navy, and I have the same goal as you. I want to get the most out of my thrift savings plan. That's why I formed Rock Capital Investments, LLC, and created The Edge. The Edge is an electronic newsletter that helps you do just that. Get the most out of your TSP. Within The Edge is a rating scale from 0 to 5. I rate the G, F, C, S, and I fund individually based on their performance and assign a rating of 0 to 5, 2.5 being neutral. Anything above is positive, anything below is negative. I use this type of scale because anyone can understand it. What The Edge allows you to do is take control of your TSP. If you want to protect it, maximize it, whatever, The Edge can help you. And since it's based off a simple scale of 0 to 5, anyone can do it. You don't have to know anything about the stock market or investing. The Edge puts you in the driver's seat in just 10 minutes per month. Take a look at this chart. I've charted the performance of all the L funds over the past year. It's important to understand that these figures are not manipulated in any way. The performance information is readily available on the TSP website. I simply charted it. I also charted the performance of the Edge over the same time frame. It's the orange line, the one on top. The L funds are simply all the individual funds combined into one fund. As you can see, they all have the same starting point, and the Edge outperforms the L funds by a long shot. But let me point out some subtleties you might not notice right away. If you look where the arrows are pointing, you'll notice the Edge is going up while the L funds are going down. This is called divergence. And other than putting more money in your pocket, here is why that's important. The TSP works on an investment strategy called dollar cost averaging. Dollar cost averaging works like this. Let's say you put $100 into the TSP every month, and the share price is $25. Well, you bought 4 shares this month. Next month, you put away another $100, but now the share price has dropped to $20. This month, you bought 5 shares. The idea is, as the share price goes down, you buy more shares for your money. So when the funds eventually go back up, you own more shares to increase in value. This strategy works with one huge problem. As the share price goes down, so does the value of the shares you already own, dramatically cutting into your bottom line. And it makes it much harder to catch up when the share prices go back up. By using the Edge, you can minimize your loss. So when the funds start going back up, you have more capital to buy more shares at a lower price and catch the ride back up. This is dollar cost averaging on steroids. This will put more money in your pocket quicker, while at the same time protecting it. The Edge is more than just a rating scale. When you receive the Edge, you can also download my ebook, Get the Most Out of Your Thrift Savings Plan, which is a must-read for anyone serious about taking control of their TSP. The Edge also has links to great information about the TSP, and I'm adding more all the time. The Edge can also help you customize your TSP to fit your needs. I want to change gears a little bit and talk about diversification. Pay attention because I have a secret most people don't know or won't tell you. The TSP is not diversified. A truly diversified portfolio would never take a 30 to 45% loss like the L funds did in 2008. Here's why. There are 5 asset classes: equities, fixed income, cash equivalents, real estate, and commodities. The TSP is only 2 of the 5 asset classes: equities and fixed income. I know all anyone ever hears is to diversify, and then diversify some more. I don't agree with that. Diversification is not a strategy to grow wealth. But you don't have to take my word for it. William O'Neill, the founder of Investors Business Daily and best-selling author, says this about diversification. Broad diversification is plainly and simply often a hedge for ignorance. Have you ever heard of Robert Kiyosaki? In his book, Cash Flow Quadrant, the follow-up to Rich Dad, Poor Dad, he wrote, "People who seek security use the word diversification a lot. Why? Because the strategy of diversification is an investment strategy for not losing. It's not an investment strategy for winning. Successful or rich investors do not diversify. They focus their efforts." In that same book, he quotes Warren Buffett as saying, "The strategy we've adopted precludes our following standard diversification dogma. Many pundits would therefore say the strategy must be riskier than that employed by conventional investors. We disagree. We believe that a policy of portfolio concentration may well decrease risk if it rises, as it should, both the intensity with which an investor thinks about a business and the comfort level he must feel with the economic characteristics before buying into it." These 3 men are giants in the financial world and have proven over the years that a concentrated portfolio or focused efforts is the way to grow wealth, not diversification. By using the edge, you can have a targeted approach to your TSP without having to learn the stock market or complicated investment strategies. In just 10 minutes per month, you can create growth in your TSP like never before. No spam, no tricks. You'll receive the edge twice a month in your email. All you have to do is use it. Ask yourself, do you want to leave your retirement up to chance? Or do you want to set a date? To learn more about how you can take control of your TSP, go to www.rockcapitalinvestments.com. Before I go, I'd like to personally thank all military and DoD personnel and their families for your service. It's hardworking men and women like yourselves that make this country so great.